Okay, let's just dive right into this. Welcome to today's Explainer, where we're looking at something totally fascinating: the merging of ancient Islamic financial principles with the absolute cutting edge of modern blockchain technology. Today, we're unpacking the Sukuk Blockchain platform. It's basically a massive ecosystem designed to take real world assets, things like towering skyscrapers, agricultural land, massive industrial factories, and actually tokenize them on the blockchain. And the kicker? It aims to do all of this while remaining completely Sharia compliant. It is a wildly ambitious attempt to completely reshape how capital is raised, protected, and distributed on a global scale. But every massive structural shift usually starts with a spark, right? And often it's a very human one. The founder of this platform, Nadel El-Silawi, framed it perfectly. He said, the story of Sukuk blockchain was the product of a painful personal journey where the bitterness of debt transformed into fuel for unwavering determination. So we're not just talking about a bunch of tech developers who decided to build a crypto platform in a vacuum. This whole project was literally birthed from a personal financial collapse, and that exact experience fundamentally shaped its entire mission, prioritizing investor protection above absolutely everything else. You can actually break this personal journey down into three distinct phases that really make up the platform's DNA. First, phase one, the collapse. Surviving millions in personal debt. That is incredibly painful. But that pain led straight into phase two, seeking a way out. He discovered Islamic sukuk, which are basically asset-backed financial certificates, but quickly realized the traditional banking bureaucracy around them was just suffocating, endless red tape. And that friction led to phase three, the birth of the solution. By taking the transparency and lightning speed of blockchain tech and combining it with a stable digital currency called the golden dinar, they built a totally new architecture for capital protection. The core mission here is entirely defensive. It's all about protecting you, the investor, from the usual pitfalls of centralized traditional finance. All right, let's move into part one, merging tradition with blockchain tech. So, we get the why behind the platform, but how does a personal mission translate into a massive macroeconomic strategy? Well, it all comes down to the sheer market forces driving this thing. $16 trillion. Just let that number sink in. According to the Boston Consulting Group, that is the projected size of the global real-world asset tokenization market by the year 2030. That's a staggering amount of wealth. Sukuk blockchain is positioning itself right in the crosshairs of this massive tokenization megatrend, getting ready to convert huge physical assets into tradable digital tokens. And if we zero in on their initial target market, there's an estimated $50 billion gap just in the Turkish sukuk market alone. Globally, sukuk demand is off the charts, exceeding $850 billion. But Turkey specifically is seeing surging demand right at this exact moment. Why? Because their capital markets board is officially opening up licensing frameworks for crypto asset providers. So the platform's creators are looking at Turkey and seeing the absolute perfect strategic launchpad to get this off the ground. Moving on to part two, the golden digital dinar. Now, to actually operate effectively in a market that size, you can't just rely on standard, wildly volatile cryptocurrencies. That would defeat the whole purpose of protecting capital. So they engineered their own proprietary currency. Think about standard fiat currencies, like the US dollar or the Turkish lira. Historically, they're subject to crazy volatility, inflation, and your purchasing power just slowly drains away over time, right? Contrast that with the golden digital dinar, or GDN. It targets a standard reference value of 100 Saudi reals. It is quite literally engineered to preserve wealth. But that raises a big question. How do you actually maintain a target value in the wild west of the digital economy? Well, to keep that value totally stable, the GDN uses a 110% asset backing distribution. And no, this isn't just backed by some fancy algorithm. It is backed by cold, hard, real-world value. 70% comes from the platform's actual project assets, like real estate and infrastructure. 20% is backed by precious metals, specifically gold, for that classic historical stability. And the last 10%? Backed by traditional sukuk. It's essentially a highly diversified, rock-solid safety net designed to lock in and protect the investor's capital no matter what the market is doing. Which brings us to part three, inside the Sukuk ecosystem. The entire platform rests on three core pillars. First up, the digital Sukuk itself. These offer Sharia-compliant investments backed by real assets, with expected returns hovering around 10 to 14%. Not too bad, right? Second is tokenization. They're taking massive physical assets, like a whole commercial center, and transforming them into highly liquid, easily tradable digital tokens using Polygon and Ethereum smart contracts. And the third pillar is something called Takaful. This is essentially a cooperative solidarity fund built from the ground up specifically for investor protection. Now, before we look at some of the actual projects, I want to impartially highlight a really important notice. As we're going through this explainer, you've got to keep in mind that Sukuk Blockchain is currently in its founding stage. So all the specific projects, returns, and daily trading volumes we're about to look at, they are illustrative demo examples right now. They're essentially structural models showing exactly how the platform is going to operate once those official licenses from the Turkish Capital Markets Board and central bank are fully locked in. Keeping that in mind, just look at what the future of tokenized, Sharia-compliant real estate is modeled to look like. These are the kinds of global heavyweight projects they're prepping. You've got the Riyadh Business Tower showing an expected 12.5% return with an AA credit rating. You've got an Istanbul commercial center projecting 13.8% and a Dubai luxury hotel projecting up to 15.2%. By taking these massive exclusive real estate deals and fractionalizing them into tokens, the platform is basically letting everyday investors participate in Tier 1 global assets right from their digital wallets. It's pretty wild when you think about it. But hey, what happens if an individual investor hits a personal crisis? Life happens, right? Well, that brings us back to that third pillar we mentioned, the Takaful Solidarity Fund. This is such a unique feature, and it adds this incredibly human-centric layer of protection that you almost never see in modern crypto ecosystems. Here's how it works. Step 1. An investor pays a small 25 GDN joining fee. Step 2. All those funds pool together to create this massive, highly liquid solidarity net, which they're currently modeling at 87% liquidity. And step 3. If an investor faces a real hardship, they can receive up to 25,000 GDN in cooperative compensation. Their modeling already accounts for payouts for things like medical aid, education support, or sudden family emergencies. It's literally a decentralized safety net built right into your investment platform.
Okay, part 4, the perfect moment to invest.
Let's take a neutral look at their current platform targets because they are incredibly ambitious as they navigate this freshly opened regulatory window in Turkey. For their founding round, they're seeking a target capital of $150 million. And because they're sprinting for that first mover advantage in this space, they are projecting a staggering 1,900% target ROI for founders over a 5-year period. However, they are totally transparent about the fact that these targets entirely hinge on their current operational status. Right now, both their Capital Markets Authority and central bank licenses are actively in progress, right alongside their formal Sharia board approval. So they are building the infrastructure for a literal multi-billion-dollar market, just waiting for those final regulatory green lights to flip the switch. Which leaves us with a pretty provocative question to think about. Will blockchain tokenization be the ultimate key to unlocking the future of Islamic finance? Can the merging of ancient ethical financial principles with decentralized, completely transparent technology fundamentally reshape the global economy? Well, Sukuk Blockchain is betting $150 million that the answer is absolutely yes. Thank you so much for joining me for this explainer, and definitely keep your eye on this fascinating intersection of tradition and tech.